introduction, Brother Ishmael is currently the financial controller for Anglo Gold Ashanti. He started this current role in April 2019. But before then, he's worked with Banru Corp as the finance manager. He was also the finance manager for Goldfields Ghana Limited in Damai. And in 2013-2014, he was also with Pesos Mining Ghana Limited as the finance controller. So cumulatively, we're looking at an experience that spans over several years, 17 years to be precise. And that is the caliber of a mentor that we have on the call this evening. I would want all of us to appreciate the presence of our brother Ishmael Kusi and give him the audience as he takes us through the topic for this evening's discussion. So, Brother Ishmael, over to you.
Thank you, Wilfred, for that introduction. Before I start, I think when we speak about finance, people who are not in the finance environment, everybody wants to shun off from finance because they see them as the number crunchers, the bean counters, as we've been called over the years. But when we broke the subject, financial intelligence, a key to a happier working life, I think we added the mining industry because we all find ourselves in a certain corner of the working life, which is the mining life. And the mining life, when you sit outside, you see it as so lucrative, as so beneficial. And yet, when you see your old miners, there is little to be desired of to be a miner. So the question is, what actually went wrong? I believe you all know one or two miners who currently are not enjoying the benefit of having worked in the mine, all because one or two financial decisions made hasn't gone right. So we decided to have this conversation this evening to bring home the point that irrespective of the area you find yourself working in mining or even outside the mining environment, you need something we call the financial intelligence, just to help you navigate your way through the financial world, which practically, I would say, comes to be the backbone as we grow older in our lives. I'll just share one thing with you. I was having a conversation with one of the financial accountants, and in our Frank AGC era had a policy that pays people until they die, a certain class of people who joined within a certain period until they die. Well, so when they receive their SNEC benefit, they also get a benefit monthly from Anglo Gold Ashanti. Now, when we were speaking, it came out that some are even 102, 103, 98, and so on. And when they come to take their money, they look very healthy. So healthy. The question is, why? Why are they looking so healthy? It's all because they know they don't have to think about what they are going to live come month end, because they are assured there is a benefit coming their way, and they passed on. At least the basic stuff will be provided for their smooth exit onto the next life. So thinking about it, we said, you know what, we need to have this conversation. I have just 5 slides to share, and normally I make it very interactive. As we go on, we ask questions, but I see here we do it differently. We're going to talk about it, and then the questions come later. So, what is financial intelligence? The basic definition of financial intelligence is just a knowledge and skills that is gained from understanding finance and accounting principles in the business world and understanding how money is being used. Now, this is where I want to pause. For the first part, when we say understanding finance and accounting principles, it looks so mundane, it looks so heavy. I mean, I'm an engineer, I'm a HR person, I'm a surveyor. Why would I want to understand finance and accounting principles? It's so difficult. I remember when we were in school, somebody asked me, why is debit on the right, left and credit on the right? Why can't we swap them? I couldn't answer, because that's what has been made to do. Debit is on the left, credit is on the right. So that tells you the mindset of people who are not doing accounting and finance towards accounting and finance, how they see it. But as a person, as an individual working, you need to have that bit of intelligence in your working life. So that part I want to look at is how money is being used, which is very, very critical to our success if we use money wisely. If we understand money, then we will know how to use it. We will talk more on that, so let's go on. It goes on to say that it's really not a new thing, though it's a fairly new term, financial intelligence. I mean, probably 10, 15 years ago, nobody was talking about it. So we could say it's a fairly new one that is coming, but it has its own roots in organizational development research, mostly in the field of employee participation. And it has emerged as a best practice and core competency in many organizations, which has led to improved financial results. It has increased employee morale. It has reduced employee turnover. Now the question is, how does financial intelligence, does all these things, how does it improve financial, how does it increase employee morale? The employee cares about being paid at the end of the month. So the question is, where is that money coming from? If the company is not financially stable, if it's not sound, where is that money coming from? Then redundancy will set in, because the company has to survive one way or the other. Or worse, shut down, doesn't come back again. And we've seen it happening. Around us, you've seen mines go down. Some come back, some doesn't come back at all. Our very own Anglo-Gold of Wase went down in 2015. Thank God it's back on its feet and plodding on gradually. So it's a reality, it's a possibility that we could get to that point. But the question is, when we get there, what do we do? So it goes on to say many organizations include financial intelligence in their program, in their leadership curriculum. So how they develop their leaders, they inculcate financial intelligence into that syllabus. So their leaders get a bit of understanding on that area. Now, financial intelligence is not an innate skill. It's not something you are born with. I mean, nobody has been born with financial intelligence. It's a skill that we can develop at all levels of life. So that's the point I want you to take home. We are not born with it. Me sitting as an accountant, I wasn't born with it. It's something I have learned over the years. It's a set of skills that can be developed at all areas, at all levels, in all walks of life. So practically, that is how we look at financial intelligence in a simple terms. Now, there are some areas that we need to understand when we're talking about financial intelligence. And there are some 4 areas I want us to understand. One, we need to understand the foundation. Now, when you say understanding the foundation, all we're trying to talk about is we need to understand the basis of financial measurement. The basis of financial measurement, which includes understanding what we call the income statement. People call it the profit and loss account. Professionally, we call it the income statement. You need to understand what we call the balance sheet. I will explain these two and the third one, and you need to understand what we call the cash flow statement. Now, this name has been changed with the new IFRS coming in, but that is a subject for the accountants. We don't need to worry ourselves. You might see it being called statement of financial position, or it's called balance sheet. Now, when you say income statement, now take yourself as a person, you as a person, as a business. Okay, you, the individual, take yourself as a business. And instead, you're going to prepare what you call the profit and loss account, or the income statement. Now, if you're a salaried worker, you know your income comes from one source. At the end of the month, the company pays you. So that is where your income comes from. Now, your expenditure then starts with your rent, with your meals, with your vehicle expenses, with all other family expenses. So when you strike out all your expenses from the income you have received from your company, then you make what we call a profit. So assuming my salary is 500 Ghana cedis, and I spend 400 out of that, I have made a profit of what we call 100 Ghana cedis. That is very simple and plain. But when you are looking at it in the bigger context of an organization, then you also require to know that there is a difference between cash and profit, and why a balance sheet would even balance. Now, I think a lot of people get confused when they say this company is going down, the company is busted. Because if you look at their income statement, they are making profits. So why is the company not able to pay their workers? Why are they not able to pay their creditors? Why are they not able to meet their short-term liabilities? You wonder, because their income statement, it says you've made a profit of an X amount. But that is profit. It's not cash. It's not money sitting in your bank account. So let's go back to take your personal life that I just shared as an example and say you have spent 400 cash that you actually paid staff with. But somebody has come to fix an air condition in your house and is charging you a 50 Ghana cedis. It's part of your expenditure for the month, but you haven't paid the person. So in preparing your income statement or your profit and loss account, you put that 50 in as a service you have enjoyed, but you haven't paid. When that happens, your profit then will become only a 50 Ghana cedis. But in your pocket or in your bank account, you have 100 Ghana cedis sitting in there. So until you pay the guy, your cash position at the time is higher than what the profit is paying. So that's the difference when we say cash is different from profit. Profit is accounted, it's on paper. Cash is what you can actually physically use. It's the liquid asset you have that you can go out there and then spend with it. That is the difference between cash and profit. So now let's go on. The second point is understanding the arts. And somebody will say, why is finance an art? Yes, finance and accounting are an art, as well as it's a science. Now the two disciplines must try to quantify what can't always be quantified. Please, let's look at this carefully. We are saying finance is an art, and at the same time, it's a science. And we are trying to say that you need to quantify what can't always be quantified. Now, if we bring ourselves to the mining environment, and then we say the ore that we are producing from underground, how do we put value to it? How do we measure it? That is where the art and science comes in. We should be able to put a value to whatever we are doing. So that's where we say we need to quantify what can't always be quantified in the general sense. And so to be able to do that, we need to rely on rules, we need to make estimates, we need to make assumptions. So the financial intelligence, it ensures that people are able to identify where the artful aspect of finance have been applied to the number and how applying them differently might lead to different conclusions. Now, if you are an investor and you are investing in the company's bond or shares and stuff, you need to understand those numbers and be able to see where an art has been applied, where science has been applied, and where real numbers have been applied. Now, that's difficult for somebody who is not an accountant bias or a finance bias to be able to do it easily. But with the art of financial intelligence, you should be able to at least get a grip of it, and then somebody else can actually pick you along. Now, we need to understand analysis, because financial intelligence includes the ability to analyze every number in greater depth. Now, if we give you an income statement or a profit and loss account, you should be able to analyze it to the greater extent. Now, you need to know why income is there as an income. You need to know why the expenditure they are putting is there as an expenditure. And always there are notes to all this income statement. So the note should be able to give you some sense of what the numbers are. And so with your analytical mind and analytical skills, you should be able to then go in and analyze and say, well, this expenditure might be meaningful. This expenditure might not be meaningful. Now, one thing we are scared to do is, because we are not finance inclined or accounting inclined, we don't want to ask questions. Now, that is wrong. You don't have to know anything to ask questions. No question is stupid. Just ask. Because you don't know, ask and get the help. Because if you don't, and you rely on your little knowledge, you might make a willful decision in terms of your finances. Money that you have earned in a hard way. Just because you don't want to ask questions, you let it go. They need to understand the bigger picture, because that's the ultimate goal. There's always a bigger picture. So finance means that we should be able to understand the business financial results in context. That is within the framework of the bigger picture. Now we need to understand the economy, the competitive environment, the regulatory environment, and the changing customer needs and expectations, as well as new technologies that has come into play, especially in this, our current era, where everything is based on technology. Even what we are doing has been made possible because of technology. And we need to, as a finance person, we need to be able to quantify what we are currently doing by putting a number to it. And if we start to do that, trust me, we should be able to put a number to it. So the areas of understanding I said are the understanding the foundation, understanding the art, understanding analysis, and understanding the bigger picture. So financial intelligence is not just a book thing, it's not a theoretical thing. It requires a practice and a real world application. And this might not be too far from us, because every now and then we have these financial institutions knocking at our doors, come and invest, come and do this, come and do that. The question is, do we really understand where we are taking our money to? Somebody says, put your money where your mouth is. So the question is, where is our mouth? Do we know where it is? So most of the times we depend on fund managers, we depend on asset managers to be able to do the finance. But it all helps. We need them because that is their field. It's like me sitting here. If I need to understand something in engineering, I will ask questions, and I will need an engineer to take me through. If I need to understand something in mining, I will need something in med, so it goes. I will need them. Now let's see what Peter F. Drucker, who is an authority in management and finance and accounting, wrote. He says, and I quote, "The worker should know how his work relates to the whole, to the work of the whole. He should know what he contributes to the enterprise. If he lacks information, he will lack both incentive and means to improve his performance. It is in the best interest of the organization that the worker have the information," unquote. So that's why you see every company publishing their financial results or operating results at the end of quarter, at the end of month, half year, and end of year, just so the worker can have all this information at their disposal. And so if they know their company is doing well, then they know their little contribution is helping make the company do well. And then they become motivated, and then they become enthused, because if they know their company is doing well, there is more reason to stay than to leave. But if you don't know, if you are being kept in the dark and you don't know what is happening to your organization, you just conjecture and you are like, you know what, I need to move on, because you don't have information. So that moves us to the next thing. How do you get financial intelligence? How do one get financial intelligence? So there are some 7 tips that we can look at quickly. One is we can read about personal finance. How do we get this? There are financial journals out there such as BF&T, that Business and Financial Times. We have The Economist, and a host of others that we can chance upon and read. They are all out there in the internet. Comes with the news media, the hard paper, you can always get them to read. What we need to also do the second time is to track our net worth. I believe with the internet now, when you Google and you want to know the wealth of somebody, they say his net worth. Why don't they just go ahead and say this is his wealth? But they say his net worth. The net worth is because they've taken all his liability away from all his assets. And what is left is what really belongs to him. So today, if you want to know my net worth, if I'm fortunate to have a house and it belongs to me entirely, it's one of my assets. If I own anything, any stock, whatever I own, it's part of my assets. Then you take whatever I owe, whether I bought a car and I haven't finished paying it, I owe the bank. If I've purchased a plot of land, I haven't finished it, it belongs to somebody, I owe the person. So you take all this liability out of my asset that you have valued. In the end, whatever you get, if you get a positive number, let's say if you get a 500 Ghana cedis as a positive, a favorable balance, then that becomes my net worth. Because if I should pay everybody, that is what I will really be worth. So that is what you need to track your own net worth in your life, and then try and see where are you heading towards. Is it a doomsday for you, or you can have a turnaround, or you are in a comfortable league, or you are in a better position at this stage? It's something you need to think about. It doesn't matter where you are in your life or your career, you can always do that because you always have something. Everybody has something, own something, owe something. So you need to work it out as you go along. Then you need to track your spending. That is also an interesting area. Sometimes when miners talk, they say the miners are talking, all because they flaunt well, all because they spend. But we need to be smart in our spending. We need to be wise in our spending. So we need to track our spending. We will talk more about it a little later. Something that Warren Buffett, the CEO and chairman of Berkshire Hathaway, said, I think is very interesting that you will share. And you need to at once in a while, you need to meet with a financial advisor or a tax planner. Here, we don't really need tax planners because we don't really file taxes at the end of the year. But if you are running your personal business, then it's imperative on you to file your taxes come the end of the year or even on a quarterly basis. So you will need a tax planner to help you. All that the tax planner does is to help you not to evade tax, but to avoid tax. Now, there are two things. If you evade tax, it's criminal, it's fraudulent. When you avoid tax, it's an art, engineering, it's thinking. You are not saying you don't want to pay tax, but you're not going to pay unnecessary tax. By putting a lot in your own company, by increasing your asset base and all those stuff, you will be able to avoid paying unnecessary tax. Because taxes are based on your profit. So if the company is not generating enough assets and everything is being left in the income statement, and then you are making more profit, you have to pay so much to the government. If you fail to do so, then you become fraudulent and you're evading tax and you'll be charged. You need to invest in yourself. And that's one of the things we are doing through the TES. I believe all the previous speakers you've had are trying to enrich our knowledge in whatever we do. So we are investing in ourselves in various capacities. We need to broaden our network, okay, not just in the area we work. I'm a miner, so the circle of my friends should be in mining. No, broaden it. We can have bankers as friends, have Marines as friends, have doctors as friends. Just broaden it because you don't know who knows that might benefit you. And you need to focus on what you can control. Now, this is very critical. And there is a lot of things you can't control in life. But those that you can control, make sure you do it and do it well. So you need to place a lot of emphasis on what you can control. The things you can't control, see how best you can manage them. Or find someone else to control for you. But the things you can have control of, like the way you spend, like investing in yourself, that place, I will advise you and encourage you to take control of that, because that one is 100% in your domain. Now, why is financial intelligence important in the first place? I believe from where you've come from to now, you know the obvious answer. It is important. Because if you don't know where you are, how can you know how to get to where you are going? Because you don't even know where you are currently. So the question is, where am I heading towards? I'm as clueless as anybody. So you need the intelligence to help you to increase your confidence. As you become more intelligent in your finances, you increase your income. You manage your expenses better. You increase your assets, and then you can leverage instead of increasing debt. Now we will talk about leverage and debt in a bit. In a simple financial terms, okay, let's look at leverage, or as it will be called in the United Kingdom and Australia, they call it a gearing. So sometimes you hear a company say their gearing ratio. Some people say the leverage. Okay, it's just a technique that involves using debt, that is money you have borrowed, rather than equity, which is money coming from within, like, or something coming like assets, some money you have sitting in the bank. So let's say today, I have 500 Ghana cedis sitting in the bank. That is my equity. But the question is, do I want to go and put my 500 Ghana cedis in a business now? If the business collapses, what happens to my 500 Ghana cedis? It's gone forever. But then, can I leverage on this 500 Ghana cedis by borrowing at a lower interest rate to do the business I'm doing, which will generate a higher return for me to be able to pay the money I borrowed at a proper or at a good interest rate? Now, recently in Ghana, credit ratings have started to come in, because now if you're going to go for a facility in any financial institution, they send your name to the Bureau of Credit, and then they check your credit standard. So if you have loans and debt that you're not paying, that financial institution wouldn't offer you anything. And then if you have multiples of default, it affects your credit worthiness. So if anybody is giving you funding, it comes at a higher rate compared to somebody who hasn't defaulted on their liabilities or loans, paid everything on time and everything appropriately. They will have a favorable credit rating. And if the facility is going for, let's say, 10%, for him, he might get it, or her, she might get it around, let's say, 2-3%. But if mine is not good, I might get it probably at 15% or even worse. So instead of using my 500, which is my own equity, into the business, if I leverage it, if I borrow money from the institution at a good rate, let's say 2-3%, and then use it wisely in the business I said it's intended for, and generate 2-3 times the profit, then I have leverage well, because I'll be able to pay the loan, pay the interest, make money, and then still keep my equity of 500 Ghana cedis. So that's what we just mean when we say leverage. Now, there are some 5 key components we need to also understand when we talk about financial literacy. Now, we're moving from intelligence to literacy. They are all in the same basket, because you need to be literate to gain the level of intelligence you need in finance. So the 5 components, we'll look at one, the basics of budgeting. And when you talk about budgeting, people try to shy away from budgeting. Oh, no, this is for the finance guys, it's for the accountants to do. No. Budgeting is not for the accountants, it's not for the finance guy. It's for you as a person. Put yourself as a company. You run yourself as a company, you need to have a budget to run on. So you know your salary is only 500 Ghana cedis. You need to have a budget for that. You need to be able to think of saving something. So you need to understand the basics of budgeting. Creating and maintaining a budget is one of the most basic aspects of staying on top of your finances. Because if you get your budgeting wrong, trust me, you wouldn't enjoy life. You need to understand interest rates. How does interest rate works? How do I make sure I get the best of interest rates? You need to scan. You need to shop around. You need to prioritize savings rather than spending. You need to understand the credit debt cycle trust. Because if you don't manage it well, your debt will overwhelm you, it will consume you. And you need to understand what we call identity theft. Somebody can impersonate you, use your name, everything, to obtain a credit facility. And the liability will fall on you, because in the end, you are the real person. It's not the other person. So we need to, especially with those of us who shop on the internet, go online to do transactions and stuff, we need to be very, very mindful of identity theft. Now we have what we call the financial intelligence factor. It's like just an IQ matrix. And it's based on a best-selling book by Jamie McIntyre, the IQ matrix. Okay, and he talks about what he didn't learn at school, but what he wished he had learned. And it all has to do with understanding how money is being used. So if you get the opportunity, you can Google Jamie McIntyre for his best-selling books and see this and try to just read as part of learning the dichotomies of finance, trying to understand, trying to read The Economist, trying to read the business journals, try and read some of these books. There are a lot of books like The Poor Dad, Rich Dad, and all those things. There are a lot of wonderful Ghanaian investors who are writing wonderful books out there that you can lay your hands on and read to gain the knowledge you are looking for. So let's look at the mindset of the financially intelligent. When we say somebody is financially intelligent, what do they think about? What are they, when you see them, what do they think about? When they are talking, what do they talk about? And he says, it's a hard way when he realized that there are certain and specific actions that competent money managers take in order to build a vast amount of financial wealth and abundance. So it's just what? Specific actions that you take. And I'll always come back to using your life as an example. Whatever steps you take today defines what you'll be in tomorrow in terms of